All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I want to give an update on what's going on this week. It's a big week in the market. There's a lot of earnings coming out. The Fed is meeting. So I want to talk about that and show you some key earnings to be looking for and talk a little bit about what the Fed is doing so that we can set some expectation of what's going on this week. This is an extremely active week. This is one of the biggest earnings week of the quarter. And this is the last Fed meeting for a little while because they do not meet next month. So let's talk about what's going on. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot and I really appreciate it. Okay, let's start out with earnings. So this is a list of the most anticipated earnings for the week. So you'll see I've highlighted in yellow 5 companies. And really, one of these companies has become a lot less important, and that is Meta, which is Facebook. So Meta used to be in the $1 trillion club. Their market cap has reduced drastically. However, they're still a $400 billion plus company, so they're still a big company, but they are no longer on the scale of Alphabet, which is Google, Microsoft, Apple, and Amazon. Those 4 are the 4 biggest companies traded in the United States, so those in particular I'll be watching for, but some earnings have already happened, so I wanted to go through some of the results because I will tell you, it has been a little bit more of a mixed bag. I was expecting some gloom and doom, and I think everybody was expecting some gloom and doom, but we've had some hit and some miss, so if it continues this way, this may not be as bad of an earnings season as we expected this week in particular. And again, all 4 of the 4 largest companies in the United States report this week. The 5th largest company is Tesla. They've already reported. Before I get to any of those, Walmart gave some guidance yesterday, and it was not good. So initially, I was extremely concerned, and I'm going to tell you what they said. Okay, Walmart Inc. provides update for second quarter and fiscal year 2023. Company lowers profit outlook for Q2 and fiscal year 23. Operating margins expected to be about 4.2% for Q2 and 3.8 to 3.9 for fiscal year 23. Okay, so the important thing that they said in here, or the thing that jumped out to me, is they said food inflation is double digits and higher than at the end of Q1. This is affecting customers' ability to spend on general merchandise categories and requiring more markdowns to move through inventory, particularly apparel. So we've got a really wild combination of things going on. Obviously, everybody knows there's been a big problem in the supply chain, yet some of these very large retailers have an excess of inventory. Walmart's sitting here saying essentially that the price of food has gone up so much, it's diverting from people buying other goods, even apparels. So that seemed like a pretty harsh warning. However, I will tell you, I'm going to look at today's results that we've seen so far because, again, it is a little more of a mixed bag. So this paints a little bit of a gloomy outlook, and Walmart is a monster. So their market cap is not quite as large as the other 4 I talked about, but the size of their company is every bit as large. They're one of the largest employers in the world. They deal with as many consumers as any company in the world. This is definitely one of the companies to keep your eye on as far as what to expect in the coming months and quarters. I'm going to talk about some of the other earnings that have already come out. Yesterday, Whirlpool announced. This morning, UPS, Coca-Cola, General Motors, GE, and McDonald's all reported. So those are names probably most of you know, some or all of those names. Those are very high-profile companies. A lot of these companies interact a lot with the retail consumer in different ways. I'm looking particularly at UPS, McDonald's, and Coca-Cola. Those are potential indicators for all the other companies on how they did. I'm going to start with UPS. Okay, just to read the headline, and this is from Bloomberg, UPS shares sink as delivery volume drops more than expected. So that's what we were hoping would not happen. So less packages being delivered means less things being bought, less money being spent. So this particular indicator is, I'm going to put it in the not so good column. However, we do want to wait for some of the other shippers to come out, and in specific, Amazon ships a lot of their own stuff. So Amazon is one of our 4 that we're looking for this week. They report after the bell on Thursday, so they're important for a number of reasons. So the UPS sales were a little bit of a disappointment. Next, I want to look at Coca-Cola and McDonald's. Okay, so Coca-Cola tops estimates on higher prices and raises guidance. So Coca-Cola is trading up today. They're up 1% off of that earnings release this morning, and it is a down market today, just about a 0.5 to 1% across the board of all the major indices. So Coca-Cola is definitely a bellwether for the consumer. This is a $270 billion company, at the vast majority, really all of which interacts with the consumer. So This one was actually, I'm going to put in the good column. Okay, McDonald's is next. McDonald's sales beat on price hikes, value menu offerings. So McDonald's had a beat on earnings. So if we look at their stock, they're up about 1.78%. They're in the green on a red day, having reported earnings this morning. So that is also very positive. So this is what I'm saying about a mixed bag. Walmart had bad things to say, and they are a giant. So I don't want to discount that fact, but these are some other really big companies that had decent quarters. They're beating earnings, but Coca-Cola and McDonald's are two gigantic consumer companies. So, so them having positive results is a little bit of a silver lining, I'm going to call it. I think in general, results are going to disappoint this quarter, and more so than the quarterly results. The guidance is probably going to have some scary language in it, like Walmart did. But some of these companies, you can see, these big companies did have decent quarters and are giving decent guidance. So I think a mixed bag is going to be considered a win in this earnings season. Okay, so lastly, I want to take a look at GE and Whirlpool. Whirlpool announced yesterday and GE this morning. So you see that GE is up big this morning, 6.7%. So that is very encouraging. Now, GE has diversified their portfolio of what they do considerably. So GE used to be thought of as a consumer company. For me, still, my initial thought is appliances when I think GE, but that's actually not their business model anymore at all. They're extremely diversified, and they're not necessarily directly as consumer driven. However, they are a big company. They're an $80 billion company, and they beat earnings, and they had a great quarter, so they're up almost 7% today. Whirlpool, which has stuck to its business model, and they are basically an appliances first store, they beat earnings, and they're up 2.2% today so far on the day. So again, on a down day where the S&P is down 0.8 and the NASDAQ is down 1.5 in the middle of the day here, Whirlpool, which generally markets appliances to the retail customers, they had a good quarter. So that one's a surprise to me because those are more big ticket items. Some of that is out of necessity. If your refrigerator breaks, you need to replace your refrigerator. However, a lot of that is discretionary, and the level at which you buy your appliances is discretionary as well. So I thought this was very positive. The two most important things people will have their eye on after the market is Alphabet, which is Google, and Microsoft. Now, Microsoft at this point has a history of beating on earnings. Their guidance seems to be excellent, and they beat quarter after quarter after quarter. So, to a little bit of an extent, it's almost expected that they will at least meet or beat earnings. So, I think that would be important. If they don't meet earnings, that would be a big letdown. Alphabet, which is Google, among other things, ad revenue is their big source of income, so that will be very telling on the rest of the economy. How are businesses, are they scaling up their marketing? Are they scaling back their marketing? I think we all suspect that they've scaled it back. So it will be interesting to see if Alphabet can meet their earnings expectation for this quarter, and more interesting on what their forecast will be. So for a lot of these, remember, we want to know how they did this quarter, but what tends to have an even bigger impact is what their guidance is for next quarter and the next year. Like we saw with Walmart, they talked about people struggling to buy food, and so therefore their sales in other things like apparels were down. So, that is a bad signal. We don't want a lot more of that type of talk, or else we could potentially see, a lot more negative pressure on the stock market. Apple and Amazon report on Friday. Apple is still the biggest company in the US market. Microsoft is a very close second, but Amazon is the third or fourth biggest company. And we're going to see if Amazon has the same type of profile as Walmart, because obviously they sell everything under the sun, and Walmart seems to have had a dent put into them on non-food items. So it will be very interesting to see how Amazon did this quarter and what their guidance is going forward for next quarter. So if I had to pick, I would say the two most important earnings that are left are Alphabet, which is Google, and Amazon. Even though Microsoft and Apple are bigger companies, Alphabet and Amazon give us different insights into the retail investor. And I will tell you, the McDonald's and Coca-Cola results, in my opinion, are very encouraging. So there is some good news, bad news in here. Lastly, I want to talk about the Fed. The Fed is meeting today and tomorrow, and then obviously at 2 o'clock tomorrow, they will tell us what their decision is. Everybody's expecting 75 basis points. Some people are still expecting a 100 basis basis point or a 1% increase in rates. So I'm a little conflicted, and honestly, I don't think it makes a big difference whether it's 75 basis points or 100. I tend to think that they may go 100 because the Fed does not meet next month. So this is their last shot for a little while to make an effect and have an impact. So a 1% increase would not surprise me at all. However, the market is expecting 75 basis points. I don't think there's going to be a gigantic sell-off if they end up doing a 1% increase. Again, it comes down to what Chairman Powell says after the meeting and what his talking points are. That's where the market will get its biggest knee-jerk reaction. So we will see. Unless they do something outside of 75 or 100 basis points, I think all of that is already built in. It may have a 1 to 2 day downward impact on the stock market, or a positive impact if, for whatever reason, Jerome Powell does not come out and say scary things. However, I think it is highly likely that people are not going to like what he has to say, and that has been a trend for some time now. Obviously, CPI data came out. It was not good at all. And then, for Walmart to announce the day before this Fed meeting that, people can't afford food, essentially, that gives the Fed a lot of cover to really raise rates. And I did a video last month where I talked about the fact that I think that the Fed is trying to raise rates as fast as they can right now because they know by the end of the year, they are going to need to be lowering rates. So the higher they can get them right now, the more ammunition that gives them to lower rates over the course of the next year as we sit in a recession. So we are days away from them technically confirming a recession. And even if they don't and try and give some convoluted reason as to why we're not in a recession, I will tell you that I think the vast majority of investors agree we're already 2 quarters into a recession. So, a recession could last 2 quarters, 4 quarters, 5 quarters, but this puts us deeply into the middle of a recession already. Investors clearly know that. We've seen a gigantic pullback in all of the indexes. So that's what I'm going to be looking for over the next, basically, Tuesday, Wednesday, Thursday. There are a bunch of other big earnings reports, so we can keep our eye on those, but those are the ones that I think most people have their eye on most specifically, so we'll have to see what happens. But again, I think whatever the impact of these is going to be short-term. However, this is not financial advice. Obviously, this is a massive amount of information that is coming at us, and there's more information past this, and this is just the beginning of earnings season. So although the 4 largest companies in the US all report this week, there's much more to come. So I just wanted to give an update and a setup for what's coming at us so that you guys know what to look for and know what to expect in this week and the weeks ahead. So that's all I got for now. Thanks so much. If you made it this far, please remember to subscribe and like the channel, and I will see you in the next video.